Okay, welcome back, investors, to Ticker Time News. I am Adam. We are here for the Catalyst Watch video. What's going on this week? Well, this week is a short week because markets will be closed on Friday for Christmas Eve. Right now, the futures market, the Dow, the S&P 500, and the NASDAQ are all down about 0.5% right now, with the Russell 2000 falling by 1.7%. Now, this doesn't mean the market will open at these levels, but it's a good indicator of what the market is thinking at this moment in time. The Omicron fears and restrictions are mounting, with cases of the COVID variant spreading rapidly. The Netherlands, for example, have gone into a total lockdown, while President Joe Biden here in the United States plans to give a, quote, stark speech on Tuesday. If restrictions are placed on the United States, then this would change the market dynamics rapidly. The market rally is in a confirmed uptrend right now, but it is struggling to keep that trend moving in the upwards direction. Many leading stocks fell last week in a pinball type fashion, just bouncing around, one day up, one day down, but ended the week flat and down for most of the indices. Now, investors should be on the defensive this week, waiting for a clear market strength before boosting any exposure, especially in growth stocks. Now, after I go over the catalyst that we have this week, I am going to go over a few tips on how to approach this specific market. Now, remember, the Catalyst Watch video drops every Sunday evening, so make sure you are subscribed to get the right information at the right time to make the right investment decisions. And to support our research, analysis, and technical breakdowns, plus get trade setups, buy, sell signals, stock ideas, deep dives, and much more, click the first link in the description below to become a Patreon member. There is a tier for everyone. I'm also building a top 10 list for growth stocks, value stocks, and dividend stocks that will be updated each month, and a top 10 momentum plays list that will be updated every week. Also, Webull has got a huge holiday promotion. Get 5 free stocks from Webull. That's free money, folks. Click the second link in the description to claim your 5 free stocks from Webull today. That is great offer from Webull. Okay, let's get right into the catalyst for this week. First, I want to touch on Bitcoin right quick. So we're going to go over to TradingView. There is a link in the description below for a free account to TradingView. But look at Bitcoin here. It has been flat for the past few days, and it is hovering right around that 200-day moving average. Now, it would be great if Bitcoin could break above that 200-day moving average and hold above it. That would be really positive move for Bitcoin. But it's just showing this weakness right now in the coin. Now, long-term, total bullish view on Bitcoin, but in the short term, it is showing weakness. It's taken a downturn, a big gap down from its 50-day moving average, which puts it in real negative territory. It's below its 21-day moving average, which makes it even more negative, and it is sitting below its 200-day moving average right now. That is 3 bad signs there for Bitcoin. And if we place a trend line, it was in this falling wedge pattern, and then that famous day, 2 weeks ago now, it just dropped right down. But if we do a trend line from here to here along these tops, you can see that Bitcoin is in a downtrend right now. And then if we clone this slope to get the exact same, place it right here on the bottom, doesn't quite match up. So we don't quite have a trading channel, but what we do have, if I take this bottom layer here and bring it up, we're almost getting a wedge pattern there. The angles aren't quite sharp enough for me to say that, yep, we're in a wedge pattern. That's what we've got here. But something could be forming in this way. So I'll keep these lines on there for now, and we'll check it every day in our live stream. Again, well, I haven't mentioned that in this episode of the Catalyst Watch video, but every day at 5 p.m. Eastern, we do the after hours show, and we talk about the markets, stocks, crypto, everything. Okay, so that's Bitcoin there. Let's just look at Ethereum real quick, and then we'll get into the catalyst. I always want to keep updated with Ethereum and Bitcoin. Now, Ethereum doesn't look quite as bad, right? It seems to be in a continuation pattern, just moving sideways, but we can start to get some lines on here that are going to put this in more of perspective. If we do put a line like this, right, to capture these points here. Remember, when you're drawing your trend lines, you need at least 2 points, right? But you really want 3 points or more on your trend line, which is the candle wick touching that trend line. You really want 3 or more to really confirm that's what's happening. So we're almost forming now this falling wedge pattern with Ethereum, but it's also just moving slightly and ever so slightly to the downside. It's at 39.24 right now. It's really holding that 39 level right now. And for Bitcoin, 50,000, that is a key area mentality wise. And also for Ethereum, that's $4,000 level. Okay, let's move off of that and hop over to some catalyst. NIO, ticker symbol NIO. NIO held its investor day. I'm sorry. I'm so used to saying investor days. It held NIO day on Saturday, which they were doing to help to promote, of course, their brand and their new products and so forth. But you see here on the chart, they've really been moving sideways and slightly to the downside. And then that downward pressure really hit the end of last week when it really made that big drop there just after earnings. We can put a wrong button. We can put a vertical right there to mark the earnings, so we can see right there about a few trading sessions after that earnings there, and then it just boom dropped right out, and it fell right out of this pattern here. So on NIO day on Saturday, and again, NIO is a Chinese EV startup. They unveiled their new ET5, which is a mid-size sedan type vehicle. And they stated that deliveries will start in September of 2022 for the new vehicle. Now, NIO also claimed that they had a record number of pre-orders just today on Sunday, so just a day later, but they did not give any specific numbers about how many pre-orders they may have. Now, staying in the EV sector, let's look at Tesla for a minute. TSLA for the ticker symbol. Now, there was some news about Tesla because CEO Elon Musk, he's been on a Twitter storm lately, just talking about all kinds of topics. But one of the things that Elon Musk talked about was that, and it was just in a tweet tonight, they will hold a grand opening party for the Austin plant in early 2022. Now, that is some juicy news from Tesla. Now, you know, recently they did have a grand opening for their plant in Berlin, and they're going to do the same for Austin, again, early 2022, which is just right around the corner. Can't believe 2021 is almost gone. Okay, with that said, look at the chart here for Tesla. They are in that falling wedge pattern as well. Now, usually a falling wedge pattern is bullish. It can mean that we're reaching a bottom, a low for a particular security, and then we're going to bounce out of that. So you want to see volume increasing, which check, we've got down here, we've got our volume. You can see that trend line there, that purple line on volume down here at the bottom. It is going up, but we have a divergence with the RSI, or the relative strength index. That has been going down, just like the stock has been moving down. Now, the relative strength index for Tesla sits at a 34.22 right now. 30 and below is oversold. So it is almost in oversold territory. So we could be reaching a short-term bottom maybe, or a long-term bottom, I don't know, but we could be reaching some sort of a bottom in the next week or two, or maybe we'll keep falling into the rest of this year and then boom, shoot up in 2022. So we'll have to watch that and see how it continues. Now, for Monday, December 20th, we have a Kathy Wood favorite stock to talk about, and that is Blade Air Mobility. Ticker symbol is BLDE. Now, Blade Mobility, they, like in their name, Blade Air Mobility, they have helicopters, and what they really want to do is get some sort of a EV flying type car in the air, but they have a bunch of helicopters and a bunch of way to move people around in the air, up in the sky. But one thing about Blade Air is Kathy Wood buys this stock quite frequently. Now, it is at a bit of a low point. If we tighten this up right here, you can see it's had these three lows, one back in May of this year, and then kind of a bottom here for about a month or so from July all the way through August. And then now we're kind of getting down to those low levels. But if you look at this earnings right here, it was a miss, right? And let me put a vertical there so you can see it. After earnings, they went on a rally. Now we're back down again. We have earnings coming up. Could we potentially see a rally after earnings because they talk so positively about the future of aviation? Well, their earnings report, they have an estimated EPS of a loss of 12 cents with revenue of $13.75 million. Now, options trading implies a move of 18% up or down after the numbers come out in the pre-market on Monday. So keep an eye out for Blade Air Mobility in the morning. They could post some interesting information, and that could get the stock moving. All right. Okay. Next up is a tech favorite, Micron Technology. Ticker symbol is MU. Now, they report their earnings as well. They have an estimated EPS of $2.11 on revenue of $7.68 billion. Now, the option market does imply a swing up or down of about 8% after the numbers drop. Now, if we look on the chart here, they were in a downtrend. Well, let's go back a little bit further. They had a very impressive rally November all the way to the top in April 2020, then into 2021. Wasn't that a beautiful time to be in the market last December and January? Wow, it was awesome. But then it sold off, and then we got another rally here in October. October was a really good month, by the way. But now it's been flat, kind of hanging out. What are we going to do? We're going to go up. We're going to go down. We're going to continue moving sideways. Well, it's in a continuation pattern right now, just moving sideways. Now, with Micron's earnings, and if they have good guidance, it will be relevant for, well, even if they don't have good guidance, even if it could be bad, right? But the importance of Micron may not be the move in the stock. It may be the information that they release with their earnings report. And it could have implications on memory and many chip related plays like NVIDIA or AMD, right? Micron stock is consolidating, but it has pulled back over the last couple of weeks. So it will be interesting to see what happens. It is above its 50-day moving average, which is a positive sign for the stock. All right, next up is Nike. NKE is the ticker symbol for Nike. Now, they also report earnings, and you can see their choppiness here. Look at their last earnings right here. I'll put a vertical there. They had a big rally afterwards. Look at earnings right here. 2 earnings ago, they had a big gap up and then another rally, right? Could we see the same happening now? Or are we going to get one like 3 earnings ago where it just moved sideways? It all depends, right? On their numbers, on their guidance, especially guidance. So before this big gap up, there was a slight downtrend, and then there was a sell-off right before earnings, and then the big gap up, right? Well, here we had the sell-off real sharp into earnings. It kind of went up real quick, gapped down because of earnings, because remember, they had problems with the whole supply chain mess that we have. And then it bounced off its 200-day moving average. So right now, we're in a downtrend. It is pulling back. Now, Nike has an estimated EPS of 63 cents with revenue of $11.25 billion. Now, Nike's results and their forecast will give us an insight on supply chain, right? And it may be key for other apparel and shoemakers and other retailers, because we want to know, is the supply chain easing at all? Or is it staying the same or maybe getting worse? So as we just talked about, Nike stock has been consolidating all up here. You can see it all through November, beginning part of December, and then it has pulled back here in the past couple of weeks. Okay, on to another one on the Catalyst Watch for this week, and that is BRZE. Ticker symbol is BRZE. Now, they are a new company, not a lot of history here. I'll open the chart up. And remember, this is the daily chart. So again, each candle represents one day. What's going on? Glad to see you. We're doing good. Hope you're doing well also at home. Okay, so BRZE, they are going to post their first earnings report as a publicly traded company. Now, they've got an estimated EPS of a loss of 60 cents with revenue of $56.39 million. Now, BRZE has got an interesting symmetrical triangle here on the chart. It could be interesting, but remember, it's a growth stock, and this is their first earnings report. And with our current environment in the market, that could keep a lid on any positive results. So this is one that could move rapidly, but it could move rapidly down as well. So just be careful with this one. I do find it intriguing, though. Okay, moving on to Tuesday, December 21st. A company that may be seen as a little more boring, General Mills. You know, they make good cereal. I put Disney in there. I got Disney on the mind because of the whole Disney and YouTube TV thing that they had going on. A little fight over how much Disney is going to get paid to keep their channels on YouTube TV, but it's been worked out. G, not D, GIS is General Mills. They have been in a nice uptrend here recently. Let's squeeze this up and look here. Look at that. That thing has popped. Look at that. Wow. It has really popped since October. That has been a really nice runner. I would be a little concerned about this pop, but they do report their earnings with an EPS of $1.05 with revenue of $4.86 billion. Now, in the last 90 days, and this could be why the stock has taken off, at least here in the past month and a half, well, actually 2 months, General Mills has posted 12 upward revisions on their revenue. This bodes really well for a beat in earnings. Now, the option market does imply a 5% swing, again, up or down as well. Now, I might be a little concerned that maybe these earnings might be priced in because of this big run that it's had here over the past 2 months. Even though it did drop 1.7% on Friday, they might be priced in. So this one is a one of interest here. So let me put that vertical for earnings coming up. All right. There's another reason why I have General Mills here is their guidance, right? And their tone and what they talk about on their earnings call. That's the important part for me, not really the movement of the stock particularly. Because General Mills will give us an insight on input cost for manufacturers, and it'll also give us an insight, just like Nike, on the supply chain. Is the supply chain easing? That's what I want to know from Nike, from General Mills. That's what I'm looking for. That's the big thing. Because if supply chain is easing some, I mean, here we are at the end of December. A lot of the holiday shopping has already transpired, right? I want to know about the supply chain. All right, moving on to Wednesday, December 22nd, we've got Carmax. Ticker symbol is KMX for Carmax. Now, Carmax reports earnings. They have been very choppy, but this choppiness has been in an uptrend. Look at this yellow line on the bottom of the candles. That's their 200-day moving average. That is moving to the upside, right? But it's been a volatile ride to get up there. Now, Carmax reports earnings. They have an estimated EPS of $1.46 with revenue of $7.32 billion. Now, in the last 90 days, Carmax has had 7 upward revisions, but it's also had 4 downward revisions on earnings, on their revenue specifically. Now, Carmax will shed a big light on used car prices and volume, right? Are people still buying used or even new cars? And the second thing, how are the prices being affected on used cars in particular? That's what CarMax can tell us. And that will help to open our eyes on the economy, macro, not on the micro. All right, so that's CarMax. Right now, the RSI is at a 36, so it's not too low, but it is low. And it is getting close to that 200-day moving average, which it has bounced off of slightly. It did dip below it here a little bit on their last earnings. Put a volume there. A vertical line there. And then their previous earnings before that, 2 ago, it got real close leading up to earnings on its 200-day moving average, and then it just took off after those earnings. So, are we getting a slowdown in automotive, used cars particularly, like Kathy Wood talks about, right? She talks about the the automotive market, right? And how most of the inventory for the automotive market are already in people's driveways. That's something that she has said that I have found quite insightful. Okay, another one that it can be very insightful is PAYX. Their company, I've used them in the past for small businesses that I have run and started. Now, their ticker symbol is PAYX, PAYX. They have a really good service for small business. They can just take care of everything payroll related for small business. It takes a lot of stress and headaches away from the founder, the owner of the business who's doing it. But look at this. Their movement almost matches what the S&P 500 has been doing. So what I want to know from Paychecks is, are small businesses, medium-sized businesses, are they bouncing back? That's what I want to know. Now, their estimated EPS is 80 cents with revenue of $1.06 billion. Now, here's something interesting about the behavior of paychecks in the last 90 days. So since their last earnings, they have revised their revenue projections upward 10 times and only downward 4 times. So that bodes really well for paychecks beating on their earnings. Now, it's no guarantee, but it does look really good. Now, like I've said, Paycheck will give us a great insight into the labor market and the participants. Are they seeing the quote, great resignation? If you Google that, great resignation, look it up. It is interesting. We have people dropping out of their workplace, their jobs at record numbers, right? That's why we have so many job openings also at record levels. If I sign up for Patreon, do you have a Discord? I do not. We communicate right on Patreon usually. But if the community, if other Patreon members, if you guys want a Discord group, I will set up a Discord group. So just say set one up and I will do it. All it takes is one person. So I haven't had been asked about that yet. So if you do want that, I will set that up. Very something I can definitely do. So answering your question there. Sorry, going off topic here a little bit. So yes, if you do want a Discord for Patreon members, I will set that up. Just let me know. Just say, yep, sure do. We want it, and it'll be done. Okay, Thursday, December 23rd. Well, Thursday is pretty quiet, but we will get the latest update on durable goods orders and the arrival with expectations for a 1.5% headline number. Now, Bank of America, they expect a surprise to the upside due to strong growth in transportation. Okay, so not a lot happened on Thursday, but the market can always throw us something, right? Okay, moving on off of that, Friday, December 24th, the U.S. stock market is closed for the Christmas holiday. Now, the NASDAQ will release its short interest report. Now, I know a lot of people on Wall Street Bets and Reddit and retail investors, they want this information. And quite frankly, they want this information real time, not just on the 15th and the 1st of every month. So the short interest report does come out, and it will be as of December 15th. Now, some of the stocks of interest include Wish, and their ticker symbol is their name, WISH, Wish. Let the chart load there. Look at that downtrend. Hard, man. It has really fallen. It's at $3.23 right now. With that big downtrend, you just know hedgies are looking to short this one. So that's why it's high interest. Now, another one that I find kind of odd that it's on a list of companies that are being shorted or potentially being shorted is Blink Charging. Ticker symbol is BLNK. ChargePoint has been doing pretty well. Obviously, it's had to pull back from its recent runs, but look at Blink Charging right here. It had a perfect chart setup and it rallied. But then, of course, it had to come right back down, didn't it? Because of the overall market environment, it changed. And it had an earnings report that wasn't so hot either. Now, the overall environment for charging stations is going to be positive for the future, okay? But in the short term, there's going to be a lot of choppiness in the market for Blink Charging, ChargePoint as well, for this particular reason. Now, Blink charging right now is oversold. The RSI is at 28.5, so it's oversold right at the moment. Will that continue, or will we get a bounce on this one? We'll have to wait and see what happens when the markets open in a few hours. No, well, a little more than a few hours from now. It's about 10:22 or so right now. Okay, another one with the potential of high short interest on this report is Beyond Meat. Now, their ticker symbol is BYND. I personally, I'm not a fan of this company. I have never traded, owned it, or anything. I've stayed away from it. Their last earnings report on a Catalyst Watch video we had, I specifically said stay away, and it gapped down on earnings. I really think that this one doesn't have a big enough market to really service it. If you understand what I'm trying to say there. Right now, their RSI has been creeping up as it's been moving sideways over the past week or so. So maybe it's actually hit a bottom here in this short interest that's applied on it. Maybe that is why it was up 4.6% on Friday. It's a possibility. All right, another one is Dutch Bros Coffee Company. BROS is the ticker symbol. Now, look at them. They haven't been public very long. I'll give you that. And they had a big rally. Look at that monster rally, that big mountain. And then we just came right back down on this one. Dutch Bros, a lot of fanfare going into this coffee company. Is there a market for it? Yes, there is. Is it maybe ahead of its time? It may be a little bit, but the pandemic most likely helped Dutch Bros and will help them in the long term. So it's one to watch. Their earnings came out right here where that vertical line is on November the 10th, and it has been selling off since that, and quite frankly, right before it. Okay, one other one on this list is Root. Ticker symbol is ROOT, its name. So Root is also on this short interest list here. It is at $3.10. Big downtrend. Look at that. Big downtrend since going public, and it just hasn't been able really to catch a break. So it's at $3.10 again a share. It was down 2.5% on Friday. Now, like I promised you at the very beginning of this video, how to approach this market. Well, an outright market correction sends a very clear signal. Get out, right? A pinball market where things are just rattling back and forth and up and down can be extremely dangerous. It's an environment that lures in investors. Come here, my pretty, right? Only to sell off sharply after you just bought in. Investors who bought growth stocks near Wednesday's highs last week are sitting on big losses today. You can take those lumps and cut your losses short, or hold on and hope for a bounce, risking a much bigger loss. Aside from possibly nibbling at leaders in sectors like, the big boys, Google, Microsoft, Apple, maybe Apple. Apple might be getting a little too pricey at this particular time. But you got Google and Microsoft and many others, right? You might be able to take nibbles on them when you have the red days in the market. Then you might get a little upside. Don't get drawn into this environment. Choppy markets chop up investors, financially and mentally. If the market bounces, you might use that as an opportunity to scale back your exposure if you got a little too aggressive recently. Wait for the market rally to show real strength. Getting above last Thursday's highs, and if we look I'm going to go to SPX is the ticker symbol I use on TradingView for the S&P 500. I'm going to go in here, and we're going to go, last Thursday would be the 20, no, that would be this Thursday, 16th. This high right here, I'm going to put a line there, a horizontal line right here. Now, the market is sitting down here close to the 50-day moving average. Now, it's above it. That's positive. It did bounce off of it on Friday. Now, if the market gets back to this high right here, and let me just make this as clear as day. I'm going to circle it too. Oh, get out of the way. All right. Let's see if that worked. Okay. The market is down here by the blue line, the 50-day moving average. If the market can get back up here into this purple area and above this blue line, which would be last Thursday's high, this would be a positive signal. Even then, you should probably add exposure slowly, and only if there are good stocks to buy. So that's my tips on how to handle this market environment. And that's the catalyst watch that I'm the catalyst that I'm watching for this week. So if you found this video to be helpful, informative, actionable, there are a couple things that I would like for you to do. Number one, click the like button. That helps to let other people know that this video is worth a watch. Number two, take the URL from this video and share it on your other social media platforms. That also helps to show that you like this video too, and you found it to be informative. And then number three, consider joining us on Patreon. We've got many different tiers, and a lot of good information is provided to Patreon members. Also, we will shortly, maybe over the holiday season, if you don't like using Patreon, we're going to set up a member section here on YouTube. It'll probably be very similar perks to what is on Patreon right now, and we'll just bring those over here to YouTube. I know some people, they want to stay on one platform and not bounce around between too many. So over the holiday break, we will set that up as well. So you'll have that option starting in January. But in the meantime, you can hop over to Patreon and then maybe come back here to join the YouTube section for membership that we will be setting up over the holiday break. Okay, and then the last thing, I just want to remind you, if you have not set up a Webull account, Webull is giving away 5 free stocks. All you have to do, click the second link in the description, tickertimenews.com/Webull, sign up for the account, deposit any amount, $5, $10, it does not matter, any amount, and then you get 5 free stocks. That's free money. So I hope you take advantage of that during this holiday season. This special does end on December 23rd. So this Thursday. So you only have a few more days left to take advantage of this offer from Webull. And again, that's for new account holders there. Okay, that's the Catalyst Watch video for tonight. I will see you tomorrow after the markets close, 5 p.m. Eastern, to talk about the markets, stocks, crypto, and some deep dives on a few stocks. But most importantly, what's on your mind? During our market close live streams, the most important thing is to talk about what's on your mind. So if you have a question, leave the ticker symbol and your question in the comments during our live shows. Every day the market is open, 5 p.m. Eastern, and we go over your questions and answer them to the best of our ability. Okay, folks, have a wonderful week trading. Watch out. It could be a choppy one, especially with all the Omicron news that's out there. And good luck with your investments. And I will see you in the next video tomorrow after the market closes. Okay, have a good evening, folks. Talk to you later.